I was in San Francisco starting in 2004, and then came and joined you in Washington in 2010. So I was out in an area that was the center of these problems developing while that was happening. And I have to say, I saw a lot, and I think I reported on a lot that was very worrisome. From day one, when I walked into the bank, I met with our banking supervision folks, and they told me how concerned they were about commercial real estate lending. So we had booming housing markets. We supervised many small community banks, and their commercial real estate lending, especially for land acquisition and development, was growing at a very rapid pace. Their lending was growing more rapidly than their deposits. They were beginning to rely heavily on brokered deposits. They had very high concentrations, often in small lending in small geographic areas that were the center of, what became the housing boom and bust. And quite a few of them ended up failing later on. My staff was very worried about that. That focused me. I had many directors and other business contacts who were involved in housing. And of course, in San Francisco, you couldn't go to a cocktail party without people telling eye-popping tales about deals that had been struck on houses, how much house prices were going up. And so I heard all of that, and my contacts were quite concerned. Our supervisory folks that I met with were alerting me to underwriting practices that were of huge concern. They were telling me about low-doc and no-doc loans, about the rising prevalence of ninja loans, no income, no jobs, no asset type loans. We supervised countrywide for a while and looked at their mortgage business, which was growing enormously. I met pretty regularly with Angelo Mozillo, and the San Francisco Fed was quite concerned about what was going on. We tried to insist on tighter risk controls, and one day Angelo came up and we had our regular quarterly meeting, and he said to me, "Janet, I have to tell you, it's been terrific to be supervised by you. You guys are really on top of your game, and we really appreciate all of the valuable advice that you've given us. But, we've realized that we don't actually need to be a bank holding company. We realized it would be okay to be a thrift holding company. And so we're changing our charter." And indeed they did so, and decided it would be nice to be supervised by the Office of Thrift Supervision that is no more. So that kind of gave me a sense of what was happening.